Hey everyone, how's it going? My name is Richard, and welcome back to the Trader Line channel. In today's video, we'll be talking about pivot points, which in my opinion are the optimal buy points to buy breakouts or buy on strength. So to start things off, what is a pivot point? A pivot point is basically a specific price level where price will make a decision and a large directional move is anticipated. And this often lines up with a prior resistance level. For instance, we've got an example of PLTR here, where we've got resistance right at this point, this high, which also lines up with the high of the prior week. And the optimal buy point is as it pushes through that specific area on high volume, and this started a 200% move in about 18 days. So this is an extremely powerful setup, and we'll talk about the specifics later on in the video, really analyzing this chart in depth. So as I said, it's often a prior resistance level, and what really helps with this buy point is to have multiple timeframes kind of coming together and having pivots on different timeframes that trigger at pretty much the same price level. So here with PLTR, as we'll get into later, you've got a pivot right at this prior high, an inside day and up, which triggers this weekly high here. As it breaks through that, it also breaks through this resistance level. And all those pivots coming together is really what creates a really strong push right out of the gate, which gets you out of profit and can get you in a trade like this one, which was a fantastic move from PLTR's IPO base. So to say it one more way, the pivot point is basically the price level where demand overwhelms supply right through these resistance levels. And getting a little bit into the history of pivot points and kind of this term, this is actually pretty interesting because, as Mark Minervini likes to say, these characteristics, these technical chart patterns are not the cause, they're the effect. They are created because of the accumulation by large institutions within a base that cause really promising supply and demand characteristics. So that's really important to keep in mind, that it's not some self-fulfilling prophecy. It's because of the structure of the market that these pivot points work. So Jesse Livermore, over 100 years ago, used the pivotal point, very similar to the term pivot point. Darvis Boxes, Nicholas Darvis, used a very similar method with his trading methodology. And of course, you've got the William O'Neill base pivot and then the Mark Minervini pivot point. And here's a quote from Jesse Livermore: "Whenever I had the patience to wait for the market to arrive at what I call the pivotal point before I started a trade, I've always made money in my operations." So that's really important. And here I just basically want to remind you guys of the overall goal of trading. We're placing very concentrated bets at very specific points based on the chart to both leverage time and money. We're not trying to accumulate within a base as the stock is falling, because we don't know how long that base is going to happen. And by buying at a very specific point, we can leverage both time and money and capture the meat of the uptrend very quickly without having to wait through a bunch of chop up and down. So as traders, we want to compound and have a rising equity curve with higher lows here. And we want to keep those drawdowns as low as possible and form these higher lows. And the pivot points and basically breakout trading using this method is an excellent way to do that, because you know very quickly if you're right or if you're wrong. And if you are right automatically and can move your stop up to break even or the low of the day. And if you're wrong, you'll be stopped out very quickly as well. So how does the pivot point fit into the style of trading? Well, as I said, the pivot point allows you to be at a profit as soon as possible or get out with a small loss. So when I buy a breakout through a pivot, I usually set my stop at the low of the day, usually within 3% or so. And if the stock works, that's awesome. But if it reverses intraday and stops me out, I take that small loss and just move on to the next opportunity. If it sets back up again, I'll try it once more. But it basically saves me time because I'm not waiting through all this chop, all this basing pattern with an AMD. Instead, I'm buying when it actually starts this very strong move. And as an investor, you're probably waiting through this base after buying it previously. But as traders, we're trying to leverage both time and money and buy it right at the point, the pivot point, when it starts to move dramatically higher. So if you're an investor, you're waiting through this chop, this basing action. But if you're a trader, you're trying to buy it through this resistance level as it breaks through this pivot set at this high right here. So once again, it's time leverage as well as capital leverage. And as I mentioned, you can manage risk very effectively because you know what to expect. As a stock is breaking out through a pivot, the expectation is that it closes strongly on high volume with a good closing range right near the high of the day. But if it reverses, as I said, you're stopped out and you just basically move on to the next opportunity. So now how do you go ahead and identify these pivot points? Well, the best way is to go ahead and study previous winners. And at Traderline, we just put out earlier this year an excellent resource for that, a Traderline model book with the best winners from 2018, 2019, and 2020. The link will be down below in the description. And you can go ahead and walk through the charts and find those pivot points and basically analyze not only where you would have bought them, but also where you would have sold them, which is an entirely separate part of the equation, which I'm not covering in this video, but it's very, very important. Now, once you've set that foundation, the important thing is that on the weekend, you scan for candidates and look through a whole bunch of charts and try to find those opportunities before they happen. And you want to be looking for a proper basing structure with price contraction on lower volumes. So here I've got a chart of Tesla, a little bit of a deep base here, but this was during the March correction, but it's set up really constructively, getting tighter from left to right. Volume also decreased significantly right at the right side of this base as price gets really tight, suggesting that there's no sellers whatsoever, and it breaks out, moves up, forms another really tight pattern right at this prior high, this resistance point, and breaks through all those pivots and starts a really nice run in 2020. So look for those pocket pivots, look for low volume right before the breakout when price is really, really tight. So that's what I mean by proper basing structure. And also, if you go ahead and miss a breakout, don't kind of beat yourself up. Instead, check what the chart looked like before the move. So kind of train your eyes to spot the next opportunity. Moving on, I just want to remind you guys to go ahead and like this video right below here if you're enjoying it, and also subscribe to the channel. We just put out an awesome interview with Weinstein, the author of Secrets for Profiting in Bull and Bear Markets, just right over there on my shelf. But definitely go ahead and check this out and subscribe to the channel for more content. We've got a ton of awesome things planned later on this year. So here are some guidelines to find proper pivots. You want to be looking for volatility contraction patterns, some type of contraction left to right within a base. You want to see pocket pivots, as I mentioned, within the base, suggesting there's accumulation. And you also want time frame alignment, which I'll go through an example with PLTR in just a second. But you also want to see volume decrease with tight price action right before that pivot point, right under that price level. And finally, on that breakout, you want to see a volume explosion right as the stock pushes through that level. And the best indication that a trade will be successful is that you're at a profit right away. That means your timing has been good and you see a lot of volume coming in, and you have subsequent days of very strong price action on high volume. And basically, the higher the volume, the better. That's more of a suggestion that a lot of institutions are kind of fighting each other for shares at that price point. So those are some guidelines here. And here's an example of time frame alignment with PLTR within that base. So at this point, we're looking at a monthly chart, and each of these bars basically represents 1 month of price action. So here we started basing, then we had a upside reversal month, and then we set up the pivot right at this prior high as well as the first month's high as well. So these are both pivots on a monthly chart. And you can see the IPO base breakout on a monthly chart looks like this huge bar going from $11 to $26 and breaking through these pivots, as we'll see not only on a monthly chart, but also on a weekly and daily basis, all the time frames aligning in one bar. So that is a monthly chart. And here we've got the weekly over here and the monthly over here. So you can see there's some additional pivots right at this prior week. And you've got the original monthly pivot as well, all triggering basically right in this one bar on increased volume. And finally, we've got the daily chart. Here is that original monthly pivot, the weekly pivot, and then, as I mentioned before, the inside day and up pivot. So all these pivots were triggered basically in one bar. So all those timeframes are aligning, resulting in a really nice trade, a breakout on high volume, great fall through as well, never breaking the 10-day moving average, which is very good. That's a sign of strength and basically contributing to a huge move in just under 18 days. So that's basically an example of all the timeframes aligning and pivots happening very close in price. And also within the space, you've got a nice VCP structure where we push up on higher volume, decrease on below average volume, and basically break out on high volume as well, as I mentioned. So that is PLTR. And here's how to basically catch a breakout through a pivot. Basically, you want to do most of your work on the weekends and when the market is closed. You want to identify candidates, look through a ton of charts, and basically set alerts at price levels right below that pivot point. You also, when you're analyzing charts, obviously want to be looking for subtle signs of accumulation, pocket pivots, basically constructive price patterns, price and volume patterns, and you want to plan out your trades as much as possible before the market opens. Then when stocks are moving through those levels and your alerts are being triggered, look for above average volume. I use TC2000. They've got an excellent indicator of volume buzz, which basically is volume run rate. And I always want to see that to be at least 100% twice the daily average volume run rate at that point. Then all that's left is to execute your planned trade and either have a profit right away or get stopped out for a small loss, or basically wait for the stock to pick a direction if it squats that first day. So that is how to catch a breakout through a pivot. Now, it's important to remember that pivot points don't always work, and that's why it's so essential to set a stop loss right when you place a buy order, and make sure you're protecting your downside as much as possible. Here we've got an example with RVLV, I think earlier this year or in 2020, and we had some pivots right at this prior high on a daily time frame. Here's another pivot, and then you have the standard base pivot, and it looked good. It was on higher volume, but then the next day it completely reversed on higher volume and took out basically all the targets to the downside, breaking through this low as well. So here I would have tried to buy through this high. This would have been the first pivot. I'm setting my stop right at the low of the day, maybe added through this pivot here. And on the next day, I most likely would have set my stop to at least break even, maybe even a little bit in profit, and gone stopped out, protecting my downside. But at the very least, you want to make sure your stop is at the low of the day, especially if you have a big gain like this right on that first day. This bar is a complete expectation breaker, and the kind of normal action would have been some nice fall through on high volume, but this completely changed course and suggests that the stock just wasn't ready yet at that point. So once again, always protect your downside and realize that pivot points don't always work. So finally, here are some key takeaways. Pivot points are price levels where demand overwhelms supply. You want to analyze charts for proper accumulation elements, and you want to establish weekly and daily routines to identify and potentially execute on pivot breakouts. And finally, you want to analyze previous winners to train your eyes and spot those winning characteristics that we talk about so much. And with that, I hope you guys enjoy this video. Let me know your feedback down below. What was your biggest takeaway from this video? And also go ahead and leave a like down below and subscribe if you haven't already to the Traderline channel. And thanks so much for watching, and I'll see you guys in future videos. Thanks.